Despite local poultry producers contending with higher maize prices and US imports, there's some good news for the sector as consumers' appetites for poultry meat keeps increasing. Local poultry producers still remain under pressure though, and the integrated poultry producer Astral Foods says that in their recent trading statement, they expect their headline earnings per share for the 6 months to end March to be between 20% and 30% lower than the corresponding period last year. Joining us now from our Cape Town studio to discuss the outlook for Astral Foods is Finweek contributor Moxima Gama. Moxima, lovely to have you as always. So 20 to 30% weaker. Why is that?
It's the feed costs. The cost of feed is really affecting their earnings, and because of the El Nino, the drought we experienced, they've had to now import their feed, and inevitably the rand weakness has affected that. So they've had to battle through all of that. Also, they seem to have had a high level of poultry stock, so they've had to do a lot of promotional work to get rid of it, which also kind of affected their earnings. So those were the two. This is despite all the other macroeconomic factors that has affected them.
Obviously, a couple of other factors that we do need to take into account. You mentioned imports, drought. I think the company's out with their numbers next week. What are some of the key things that we should be looking out for?
Okay, so they're very consistent with at least good earnings with their revenues. I mean, chicken, they are producing a commodity that's in demand. They're looking at increasing their broilers to about 5 million per week. And now, because they supply KFC, it would be from last year, so it'd be interesting to see how that has improved their numbers. Look, it's Astral is a solid company besides all the other factors that come into it, the international factors or competition that comes into it. So the odds are really not against them unless anything happens with the policy, which they've already agreed on.
In terms of
the Algoa policy, that is.
Yeah. In terms of strategies, looking at its PE trading at around 6.16. So is this a buying opportunity right now for investors?
Definitely. I mean, that's a really affordable PE. It did take a bit of a knocking because of the AGOA policy and maybe a bit of uncertainty and insecurity with investors, but it seems to be picking up a lot of good momentum at this point. So at around any level around 120 makes it a really attractive level, because then it would be out of a huge bear trend, and you could then see it go to 160. From there onwards, you'd really want to increase your position, and I see at least 100% retracement to about the 210 level. So this is, this is a steal. So you'd want to get in as soon as possible, actually.
Interesting thoughts there, obviously, from Moxima. I just want to elaborate on some of the issues that we never got an opportunity to talk about. You did talk about the fact that we've got the issues around drought. Just another thing, Moxima, that we would really like to still mention is around the import and the imports, and of course we do have AGOA. Where are we sitting with that? I mean, obviously we had to make certain concessions.
Yeah. Look, I mean, the whole indecision with the AGOA and having the US importing their poultry in South Africa has crippled the industry. I mean, that's why a lot of the shares did fall down in that sector. Astral did lose about 1/3 from November. That's on top of what it did lose. It really doesn't benefit the balance sheets at all. And Astral is looking to at least lose 4 to 5% of local production. So they've kind of accepted it because it is a policy that the two countries have agreed on. And they'll probably look around at, improving their earnings from doing other things. But at least they've settled that. I think they've agreed on, I think it was 650 tons per year. So that's done and dusted. That's why it's probably easy now with that dust settling for them to then, for the share price to at least appreciate.
Moxima, thank you so much for joining us. That was Finweek contributor Moxima Gama. Up next, we'll take a look at this week's Editor's Choice.